In this week's video, I'd like to go over some analysis in the Dow Diamonds. Now, overall, I still like the market as long as the recent decline terminates somewhere above the September 4th low. So what I've done is basically run and calculate the price relationships that come in above that low. There are three standout zones that I'm looking at for possible buy. The first one comes in at 133 even to 133.42. The second one comes in at 131.71 to 132.25. I actually kind of favor this one a little bit because it includes a 618 retracement plus quite a few other symmetry projections. And then the third zone would be this 130.71 to 131.10 area. So now what we typically do with that information is we watch and see if one of these zones is tested and holds, and so far we are testing and holding the first one. Then what we do is we go down to a lower time frame chart and look for a buy trigger. A buy trigger is essentially something that is telling you that it's worth placing a bet against one of these zones. Now, for example, if we do get triggered into the buy side against this first support decision, if we hold above this last low, then the initial target for the trade setup is going to be the 1272 extension of the swing into the zone. Okay, so that's basically taking this high to this low and extending beyond 100%, and that gives us the initial upside target at this 137.33 area. Okay, now if we don't end up holding this zone, any targets will have to be recalculated. For example, if we end up trading down into the lower support decision and then trigger a buy entry, what I would end up doing is then running the new calculation off the new low and then extend it upward for a potential upside target. But bottom line, these are the decisions that I'm looking at. There are three standouts that come in above the September 4th low in the Dow Diamonds. So let's see what the market does against these zones and trade accordingly.